Okay, good morning, folks, and welcome to Stock Charts Today. This is Bob Desmond at the Contrarian Trader. Members, if you haven't seen the week ahead commentary where I discuss our strategy as we move into the new trading week, it's posted in the members area. Please go check it out. For those not familiar with what we do here on Stock Charts Today, we review the pre-market activity, and then we segue into members stock chart request, and that's where I review the symbols that our members submit for me to review on video. At current, it is Monday the 12th, 4:54 in the a.m. Eastern Standard Time. Happy daylight savings. I think we lost an hour, right? So that stinks. But happy Monday. We're back, and let's get to it. Let's begin with the jobs data from last week. What you're going to hear going into this week is that the jobs data set the tone for the next leg higher in the market. What's my response to that? Maybe. We did see a breakout on the NASDAQ, but what you're going to hear on CNBC are the talking heads trying to take up parking space in your head, trying to get you to believe that it's all safe to go back in the water. Before you do that, please, we need to take the economic data as a whole, not as an individual report, as a whole, and appreciate what it has been telling us. And net, the economic data that has been coming out over the past couple of weeks has been very, very weak, with the jobs report being the outlier. And remember that while the headline number, which is all they want you to look at, the headline number, the big beat on the jobs number, remember that what they don't want to talk about all that much is that the average hourly work week did not expand as expected, and that earnings were subpar. So again, don't let these thugs take up parking space in your head. That is all they're going to want to talk about, meaning the jobs number when they go on CNBC, the slick-back salesmen who call themselves fiduciary money managers. All they're going to want to do is take up parking space in your head. Don't let them do it. On the news front, we have a little bit of turmoil going on over with our friends in Japan. There's a headline on Zero Hedge, and I love ZeroHedge.com, but sometimes they use their headlines as clickbait, and their headlines can be sensationalized. So to validate what's going on over in Japan, we'll come back to the S&P futures. I want to take a look first at the yen. And the yen, there's no real major reaction overnight negatively on the yen. In fact, it's up. So there's a headline that Abe, Prime Minister Abe, may need to resign. The Japanese yen is certainly not reflecting any type of turmoil to that magnitude of an event. Getting back to the S&P 500, we are having a strong morning. We're up 9.5 points on the morning. We're coming off the highs of the session somewhat, but still a strong morning. I'm not going to be a bit surprised to see a pullback here fairly soon, perhaps even before the market open. We are leaning into, you don't see it here, we are leaning into the 2 standard deviation Bollinger Band. So expect at least a pause fairly soon. The NASDAQ 100, a strong morning. Again, we saw topping tails, the prior bar, this bar. These are all 4-hour charts, if I didn't mention that, sorry. We're coming off the highs of this bar as well. We're up 0.6% on the morning, so a strong morning, but expect a pause fairly soon. But we do have new weekly highs, folks, already in the pre-market. On the S&P 500 and on the NASDAQ, we have new weekly highs. Let's take a look at the U.S. dollar. The dollar broke down below support overnight, and we are sitting yet again with an 80 handle on the Dixie. We have inflation data coming out this week, the CPI and the PPI. Gold, it broke out overnight above this upper band of resistance. It's giving it back now. It's starting to weaken up here yet again. So it's not capitalizing on the weakness in the dollar, which is really disturbing for those who are long of gold. And I have the gold miners, so yeah, it's disturbing. Taking a look at oil. Oil has come off the highs of the session. It broke out on Friday It's now pulling back and retesting the breakout point on a 4-hour chart. Bitcoin, a big gap higher this new trading day. We are up 560 points or 6.21%. We're coming off the highs a bit. We'll probably retest the support level. So for those of you out there who are wondering what the next resistance level is on Bitcoin, a rally and a close above this upper band of resistance at around 97.35 will probably take you up to 10,088 on Bitcoin. So Bitcoin having a very strong day today. Let's get to member stock chart request. All right, the first chart up, Costco. We'll go with the weekly chart first. On a weekly basis, we had a good week last week. And you may be saying, Bob, the shares closed down. It doesn't matter. What matters is how they closed, right? We were down intra-week, and we retested the lower band of support, and we rallied off of it. Now, to be fair, we did close off the highs of the week, but we did net close above the upper band of resistance. Good stuff. What we're looking for here on the indicators is a double bottom setup and a higher low on Stokes. The same deal here on RSI, which is rolling over. But that can be resolved easily if we break out. Volume last week was very high, but a lot of that was backing and filling. So net on the week, not much in terms of a price move. We were down 0.4% on the week. When you take a look at this volume, it's not much of a big change in price. So weekly chart, I think, is bullish for Costco, despite the fact it's had 2 down weeks. Daily chart, we are in a trading range. We did break out the 14th of February. We have been consolidating ever since. The one thing I will warn is that we have both lines on Stokes trading down below the 50 level. And what that means is that you still have buyers out there that are selling strength. And what I always like to teach members is that when you see the Stokes declining down below 50, rallies tend to fade. So I would always encourage that people wait until that final hour of trade. Final half hour is even better before they pull the trigger on any trade, and especially when you have both lines on Stokes trading down below the 50 level. And what also happens here is that because this is a momentum indicator, you at times do not get follow through. Meaning, we had a bullish key reversal here on the 5th. One might have thought we would have had a continuation move higher on the 6th, and we did. The problem is that we reversed off the highs of the day to close lower. So just be careful here. Watch out for your declining Stokes. Volume was above average on Friday after we saw some institutional selling. We broke out on Ultimate Oscillator. No breakout yet on RSI. I think that Costco can be bought in the next couple of days. I wouldn't pull the trigger yet. The next chart up, Deckers. I've spoken a lot about Deckers. I like the chart. I love the relative strength. I'm surprised that after Friday's price action, given the relative strength versus the S&P 500 that it has shown, the shares have yet to break out. So that in and of itself, the lack of a breakout is a bit of a warning flag. We are in a trading range. We have resistance above at 99.88. I think the shares can be bought on a breakout above this upper band of resistance. Volume last week was very good. Daily chart. We had an inside day on Friday, meaning no new high, no new low. So the jury's out as to which way the shares are going to head. And in short, if you want to boil things down, which is what I always like to do, boil things down to their simplest form, using the charts, always using the charts. Throw some lines up. Set some criteria which these shares need to comply with before you hire them or buy them, right? If you buy them, it means you hire them to make you money. Now, if Deckers breaks out above the upper band of resistance here, well then, it gets the job in my portfolio. But the minute it breaks back down into this trading range after it breaks out, or if it breaks down below the lower band of support, it gets fired. It has no place in my portfolio. So we're looking for a breakout here before we hire deckers to make us money. That's the attitude, folks. Granite Construction, GVA. We were looking at this one back here on the breakout. Then the markets fell apart. So did GVA. Last week we had a bullish key reversal week, and we closed right at resistance. Depending upon how the daily chart looks, these shares may be a buy on a new weekly high. We have a double bottom setup and rising RSI. Stokes are hooking up yet again. That's good stuff. Volume was below average last week. Let's drill down to a daily chart. All right, so a very strong move on Friday. A bullish key reversal on the day. 61.98 is the pivot point of this double bottom setup or a W formation. We have RSI rising. Stokes are rising. We are very close to a breakout here on GVA. Volume on Friday was very light. Keep in mind that we have resistance above. Now we did clear resistance at 61.41, which was bullish, and that has acted as a resistance level for a couple of weeks now. We are now past that. I think we're moving higher here on GVA. If you wanted to nibble on the shares on a close above 61.98, I would go for it, using a stop right below 61.41, because if we break back down below that support level, we're back down into this trading range, and we have no business being long within that trading range. And once we clear 68.58, we'll want to be aggressive buyers of GVA. Why? Quarterly chart, no overhead supply. So we have no buyers back here who have been sitting with the shares for months or years waiting to get made whole, who are going to sell every time the shares move up 25 cents. We don't have that problem. In fact, that problem came to an end last quarter when we broke above the Q3 2007 highs. Now this quarter here, we pulled back. We actually undercut last quarter's lows, but we bounced back some. So this quarter is coming to a close, and it's actually an interesting chart. And if we close at the highs of the quarter, very bullish setup here for a long-term bull run. So I really like the chart on a quarterly basis. I would love to see it close positive, though. Oriental Financial Group weekly chart, a bullish reversal week last week, and a close, let's be conservative here, right at resistance. One might argue slightly above. I'll go for that. But for the sake of mentoring here, I'm going to say we closed at it. Why? It's because I'd rather adopt a conservative approach because I already know what the daily chart looks like. So I'm actually segueing into the daily chart as I'm talking about the weekly chart this very moment. Volume last week was light. Now, there are a lot of shorts. The last time I looked anyway, that was about a month or so ago. There are a lot of shorts in this name. I'm going to assume they're still there, waiting to get squeezed. RSI rising, Stokes rising on the weekly chart. I think the weekly chart is looking good, and in all probability, we are moving higher. Daily chart. Now, the reason why I was a bit conservative while talking about the weekly chart is that on a daily basis, we are leaning into the third standard deviation Bollinger Band, and we pulled back on Friday after we flashed topping tails, not only on Thursday, but on Wednesday as well. What does that imply? It implies that we have sellers above and they are leaning into the shares. We may get a pause here, perhaps a bull flag setup, a triangle formation, one of the two. They're all good. What they are continuation breakout patterns. That's what you want, right? You don't want the shares to continue to keep leaning higher, because eventually, if they get too overbought, you're going to see some sellers really lean into the shares, technical shorts, leaning into the shares, and you don't want any part of that. What you want is a nice pause, a pullback, a consolidation, setting up for that next stair step higher, and a breakout on a weekly basis. So longer term, I think the shares are moving higher. I think the banks are moving higher. I'm very bullish on the sector. We're long, but just show some patience here with OFG. Interface Inc., symbol tile, very close to a breakout here. I think that we could buy the shares, nibble anyway, on a close above 25.75. We have rising stochastics, rising RSI. So momentum is at its back. Volume was a bit light. Ultimate oscillator rising. And once we get above 26.18, it's off to the races for Tile, because just like we saw with Granite Construction, which is one of our previous charts, once we clear the highs last seen back during the July quarter of 2015, it's off to the races. No overhead supply, clear blue skies, meaning no buyers from back here, from yesteryear, waiting to haunt you by selling their shares every time we move up a quarter point on TILE. So we're very close to a major breakout here. So this is the higher level view. Let everybody else worry about the intraday 10-minute charts and 2-hour charts, etc. Worry about the higher level view, your monthly, quarterly, weekly charts. Use your daily charts and your intraday charts to time your buys and sells. Otherwise, pay attention to the higher level view. That's how you're going to make money in this business. Waste Connections daily chart. We broke out above resistance on Friday. A very, very bullish day, a bullish key reversal. Volume was light though on that breakout, so a warning flag on the track. We've been talking about Waste Connections for quite some time. These shares are very close now to being a buy. Remember, there's more to come here. Weekly chart. The breakout is indisputable. A beautiful setup here. But volume, folks, is a bit concerning. I will say that. I don't want to rain anybody's parade, but volume does matter. No matter what these newbie technicians that come on Bloomberg and CNBC say, volume still matters. Health Equity. This is a weekly chart. First, let's pull back to a quarterly chart and answer the question. Do we have any overhead supply? Nada. Nothing. We are at all-time highs back to the weekly chart. And last week, we broke out on a weekly basis. Now, we are leaning into the 3 standard deviation Bollinger Band in red. Does that mean that we can't move higher? No, of course not. We can. But I would really like to buy the shares on a pullback and a retest of $58 per share. I think the shares can be bought at that level. I think this is a beautiful chart. RSI broke out back in February, the week of February the 5th. We have since pulled back, retested the breakout point, and broken out yet again to higher highs. Volume last week was a bit light. So a warning flag on the track. Watch your volume. Higher highs, and we're very close to putting in higher lows on Ultimate Oscillator. MACD histogram rising. Daily chart. So yeah, I think what we're going to get here is a pullback. You already saw some sellers move in at the 60 level. That's where your profit takers are going to look to book profits at round numbers. So watch for a pullback here, and ideally a retest of $58 per share. And honestly, we may have already had that retest 2 days last week on the 6th and on the 7th. So if we pull back and retest 58.28, I think that that's a good level where the shares can be bought at. And obviously you want to use a stop right below this support level here at 57.72, because then that'll drop you back down to this trading range. And if that occurs, that's a breakout point failure. So I would nibble on a pullback to 58.28, buy more on a rally up and through $60 per share. Intel weekly chart. Let's first talk about the semis. I underestimated the semis several weeks ago. I covered a short of the semis. We took a loss there. It of course initially stung, but when you look back and you say, thank God I covered that short, it makes you feel pretty good. So don't forget, cut your losses quickly. That's what we did, and thank goodness that we did. So now we can brag about taking a loss. That's when losses are good. When you showed the wisdom that you were wrong on the trade, cut your losses quickly and move on. Now, Intel, it broke out last week above $50.51. I think these shares are moving higher. We have a breakout on RSI. Don't be the least bit surprised to get a pullback and a retest on both price to $51 per share, maybe even an overshoot to $50.50, and a pullback on RSI and a retest of support. I would expect a rally off of both the breakout point on RSI and off of a potential low down to $50.50 on price. Volume last week, outstanding. We're seeing institutional demand for the shares of Intel. Daily chart. Here's the support level I'm looking at, $50.51 for a pullback. I wouldn't be the least bit surprised to see a continuation move higher this morning. Remember that the NASDAQ is already up fairly strong this morning, a bit extended on a 4-hour basis. So I wouldn't go chasing the shares of Intel if we put in a new daily high in the morning. Let's see how the market closes out the day. I'm always suspect of a market that is opening up strong in the pre-market. Remember, the talking heads want you to get all excited about the price action on Friday. They want you to go running in and buying shares on Monday morning because they want you to get fear that you're missing the boat when you should actually be fearing that you're buying into them selling their shares. So show some patience. Let's watch and see how we close out the trading day. Let's watch that final hour of trade for direction of as to where the markets may be going on Tuesday. Ultimate oscillator stair-stepping higher, looking good. I'm very bullish on Intel. Marvel Technologies, weekly chart. A failed breakout last week. I would wait for a close above 24.21 on at least a daily basis. Volume last week was very strong. So we're seeing institutional demand for the shares. Daily chart. Yeah, the shares got a bit ahead of themselves on Friday, I guess, and sellers moved in and took the shares off the highs of the day. To me, when I see this, that type of price action, it tells me that we'll probably get a pullback and a retest of support. That's your opportunity to get long of the shares with a stop right below 24.21 on a very conservative basis. If you're looking to keep that stop fairly loose, look for a stop at $23 per share. You close down below that level, you want to be out of the shares. Volume, outstanding last week. Really good stuff. Let's drill down to a 2-hour chart. I'm a bit curious. So 2-hour chart, we have an inverted head and shoulders setup. Left shoulder, head, right shoulder. Here's your 45-degree neckline. If we get a pullback to 23.95, I think that these shares are a buy all day long with a fairly tight stop. So Marvel is looking good. We do have some overhead resistance. No big deal. On this 2-hour chart, you could see that we extended through the third standard deviation Bollinger Band. It's unsustainable. So we got the pullback. I think that it's a healthy thing that we get the pullback. It alleviates some of the overbought pressure on the Bollingers. I think any pullback down to the support level here can be bought. Just know your predefined stop when you're entering this trade, okay? And that's it for this morning, folks. Everybody have a profitable trading day. If you're watching this on YouTube, please subscribe to the channel. Click that bell so you get notified of when I put out a future video. Or if you watch this on the website, please enter your email address and you'll receive our best stock charts, which I'll link to at the end of this video for the next coming week. I produced that video this past Saturday, so you can watch that immediately following this video, which should appear for you right now. Actually, that best stock charts link will appear for you in a moment. I just need to go over one last stock for one of our members, which I omitted, and let's get to it now. PPL is the symbol. Weekly chart. This is the very definition of speculative, okay? We don't have a lot going for us in terms of extreme overbought and extreme oversold conditions, meaning the probability of a rally is quite strong. Is there a possibility of a rally? Sure. Let's talk about what the shares have going against them first. What the shares have going against them is the fact that we are in a clear and defined downtrend. No doubt about it. So the path of least resistance is to the downside. Now, I do have a soft spot in my heart for stocks which have taken a pounding and are poised for a potential rally. Now, that being said, that rally will be brief and it will roll over in all probability. You have to make that assumption prior to going into the trade. Now, last week we bounced off of a support level last seen back in September of 2015. We closed off the highs of the week. Volume was very strong to the upside, but a lot of that was selling. So we can't really hang our hat on this volume bar as being a very bullish indicator. The MACD is very long in the tooth, and we are topping out on the ADX lines in red, possible double bottom in green. Higher lows getting put in an RSI. Our Stokes are rolling over, but I think what we're putting in here is a potential for a higher low on a weekly basis, daily chart. Now, on a daily basis, we have RSI, which, again, as I mentioned earlier, we do not have an extreme oversold condition like we had back here back in December, January. We have rolled over since that extreme over condition, taken out those lows, and we are now consolidating right above the 2 and 3 standard deviation Bollinger Bands. We did break down below the lower band of support. However, last week we did manage to rally back. On the 8th, we pulled back, retested on the 9th. Let's see whether or not we can hold it here. Now, is there a good time to go buying these shares? I think the best you could do is to nibble here, assuming that we open above this upper band of resistance using the stop right below 2707. If we break down below 2707, you have to assume that shorts will lean into the name and take it down to the next support level. Now, if we rally up and above 28 to 2810, you could add more. I would expect to see a rally up to, let's call it, the upper band of resistance at 2950. I would book profits there. I wouldn't bet we're going to go breaking out above it. I would book my profits, move to the sidelines, then watch and wait. If by chance it happens to rally up and through the upper band of resistance and, more importantly, a close there, then you could look to reopen your position. But I would not speculate that we're going to rally up and through the upper band of resistance and go shooting off to new all-time highs. That's stinking thinking. You don't want to do that. You want to book profits right into where the probability of the shares will find resistance and roll back over again is most high. So don't fight the tape here. Volume on Friday to the downside was high. So there's a lot of risk here. So please use a stop right below 2707 if you plan on buying these shares today. And if we open up below this lower band of support at, let's call it 2730, stay away. Don't go buying them because in all probability, we're breaking down further. And if you want to watch our most recent best stock charts, it should be right in front of you right now. Have a great day, folks.